Started. Okay, everyone, welcome to Ready for the Bell Trading Group. My name is Kevin. I'm going to be talking about the trade this morning, which turned out to be a great little trade. So we're going to talk a little bit about Forex. We're going to talk a little bit about options and a little bit about the market. So the first things first, I want to just jump off straight into Forex. What you're looking at here is Oanda. This is the MetaTrader platform through Oanda. MetaTrader works on dozens of different brokers. So this is MetaTrader, and for those who signed up with Oanda, if you guys need any help downloading MetaTrader, I really like Oanda. It's pretty basic. Once you get logged in and everything, all the tools that you need, they're kind of on the main page. So if you guys need any help with that, let me know. But your screen is going to need to look, you're going to need to pull that up so that you can make trades. And you're going to want to download the app on your phone. And the reason I say that is there's going to be times where I'm going to send out a trade call and you might be out and about. You might be at work. You might be out with friends, things like that. And I've been doing this long enough to know that these apps that weren't around when I first started, not to the sophistication that they are anyways now, that having that just on your phone and being able to place that trade while doing your own analysis on your desktop or your Mac or whatever first, but knowing what you're going to do and then getting that alert either from myself or from an alert that you set up on your platform, and just being able to punch that in, it's invaluable. You can't measure it because sometimes these things happen to snap of a finger. Give me 1 second here. Where did I put the charts? No. Nope. Perhaps I closed them. Let me pull back up here. Okay. So there we go. Yeah. So you can see cats up here. We're going to talk a little bit about Caterpillar. First things first. Euro Aussie. I'm going to bring up the chart first, and then we're going to go back to MetaTrader. I hope everybody saw the chat this morning. Now, I put in a whole slew of trade alerts and indicators telling you guys we've got a trade opportunity. Something you guys might want to consider is I remember living in Pacific time zone a couple of different times when I first got into trading. And I remember that unfortunately, the market opens at 9:30 Eastern Standard Time. So for us Pacific folk, that's 6:30 in the morning, which I know some of you are just not morning folk. And we don't have to be morning people to make money in the market. We certainly don't. But there are going to be times, you guys, like this morning, that a trade opportunity is going to present itself. And that's just one of these sacrifices that we kind of have to make. There are three trading time zones in Forex. First of all, Forex is a 24-hour market. If you haven't had a chance to look that up or what Forex is all about, I'm going to be talking more and more about it, so you'll get everything you need to know as time goes on. It's 24 hours a day. There are 3 trading sessions. There's the US session. Whoa. There's the US session. There is the Aussie Asian session. And then there's the Euro London session. Okay. These are the three biggest, well, they're really the only three important sessions. Okay. I used to trade all three. And I know that sounds crazy, and it was. And a lot of us did, because that's just how you got on top of some of these trades. Well, over time, I started losing my mind because I was not sleeping for more than 3 or 4 hours a day, and it wasn't really worth it. Even though I was making lots of valuable trades during times that most normal people are sleeping, um, that lack of sleep and that lack of sanity would just cause me to realize that nothing is worth that. So I whittled it down to the Aussie and Asian session are important. They're in the evening, so it is possible to catch it. But the Euro and London session, it's just not possible, guys. So you don't need to worry about these, but you will see movement during these times, during the Aussie and London session. Overnight, you'll be like, whoa, you'll wake up and you'll see candlesticks just blowing up, and that's just how it is. But the biggest time the market moves is the US session. The US stock market is the most liquid and volatile in the world. So if you want to be on top of these opportunities, you're going to have to make yourself available to opportunities that might be early in the wee hours in the morning. And that doesn't mean that you need to wake up every morning. Certainly not. But you should keep your phone, which I'm sure most of you do. You have your phone next to your nightstand. You should keep your phone with the alerts on high volume. So that way, if I'm sending a message out or an alert comes up on your phone, it will hopefully wake you up so that you can jump on it. They're not always going to happen. I mean, this is the first one I saw that I was interested in jumping in the group, a group trade this whole week, right? And even with elections, I didn't think we were going to do anything, and it presented itself. So I think I sent out the trade at 6:30 in the morning. So it was right when the market opened. So most of you probably weren't awake. So you gotta keep those phones next to your bed. You gotta keep those alerts on. We don't want to miss these opportunities. Now let's talk about the opportunity that happened. This is it right here. As you can see, I'm looking at a daily chart. Each candle is representing a day. Each candlestick is representing one day. Well, at the time, I talked about this on Monday, and I said, hey, we're coming into this support area. Our original trade was looking for this to come back up and soar on higher, but the Australian dollar will mimic what the US stock market is doing. And the last few days, the stock market has been on a complete tear, right? So that's just bound to happen. We're bound to get some weakness. This is not my bias to be short, but I'm not going to take advantage of an opportunity that I see coming up. And sometimes I see these and I'm going to take advantage of them. This break of support that happened today was a good opportunity to pick up a couple hundred pips on the short side before we continue our rally on higher, right? So what I did here was I was watching this, and this is an hourly now. So at 7 in the morning, my time, I'm in Mountain Standard Time at the moment. This is where I was watching it, right here. Okay. And I said, you know what? If this breaks this 1.6300 area, the 6,300 area, I want to be short. I'm going to sell this. I'm going to sell this pair, and I'm going to look to target. Yeah, I'm going to look to target that support area. Now I put all this in the group chat, but I wanted to discuss and go through this particular trade, because guess what, guys? This is going to be a common thing that occurs, and I'm going to go through this particular trade and what happened, so that you guys can be ready for the next one. So this one broke out right here, and I put my stop, or I put a sell limit. So sell limit So first off, sell stop is basically a market order in a way. A market order is you just get in at whatever the price is. A sell stop means that it's going to get you in right below the level that it's currently at. Okay, meaning if I'm looking at 6,300 and I put my stop at 6,290, it's going to trigger me as soon as it hits it. Okay, and so that's a sell stop. So meaning it will go straight into it. It will trigger you in once price hits that if you're above it. A sell limit, which is the order that I put on, is a little different. Okay, I saw the break and I said, you know what? I'm going to wait to see how far this goes. And it took a nice little 20 pip drop, and I'm going to illustrate that in a second. So I said, I'm going to get in if it comes back. Okay. So I said, I'm going to get in at 62.95. So I put a sell limit for 62.95. What that means is, I'm going to shrink this down even further. What that means is, now you can't see it here, and I'll go even smaller, but I typically don't look at these time frames, so don't worry about ever having to look at the chart when it's this crazy looking. But what that means is that when price comes down, I was looking at it to do this: come down, then come back up, then continue its sell-off. Okay, that's what I wanted to do. It did that. It in this candlestick right here, I think, is where it came down. It looked like it was going great, so I was feeling confident about this little direction. So I put my sell limit at 62.95. It triggered it, and I was targeting 61.50. Okay, so I'm going to write all that out real quick. I was targeting 6150. Okay, so that was my target, and now my stop. That's a whole nother thing that I wanted to talk about really quick. Which MetaTrader app do we download in the App Store? There's MetaTrader 4 and MetaTrader 5. Excellent question. MetaTrader 4. Okay, so and then you'll just sign in with Oanda, whoever else you're using. If you guys all took my suggestions, Oanda. So anyways, what we do then is what I did then is, okay, well, I'm going to be wrong. I know I'm going to be wrong. It's going to happen. I hope I'm right, but can't always be right. So I was checking to see if this was going to come back up. Now I initially put my solid stop, or just my, I call them a dead stop, meaning I'm just out at this price if it goes any higher. I put my initial stop at 100 pips above that. And the reason I put it at 100 pips above, which is pretty big, that's a pretty large stop, is because this pair, this Forex pair, the Euro Aussie, it's a mover. This girl moves a lot. She will move 100 pips in one candlestick. Okay, so you knowing that, I knew that we needed some wiggle room. So I gave it some wiggle room. I put my stop at 1.64. Okay, which brings me to right about here. Okay, so that makes sense, doesn't it? Price has to come all the way back up here and to unvalidate my original decision. So that gives me a lot of wiggle room. Well, the other thing was, if I can't be available to the charts, I have to have a stop. That's really what stops are for, is to say, for multiple reasons. One, to make sure that you don't continue to stay in a loss longer than you wanted to if you're not available to see them. Also, it's there to say, if this I'm being invalidated, I no longer want to be in this trade, so we put these stops in. Well, in this particular case, I put the stop in, but I was going to watch it, because there's no reason for me to stay in this trade and lose 100 pips if I don't think I'm right anymore, right? So let's go back to an hour here, just so we can go back to the intraday time. Yikes, there we go. So I'm watching this. I don't like to get into the 5 minutes, meaning every 5 minutes, one of these guys will come out. That's just way too short a time frame for me. So I was waiting to see how this one candlestick would do. If it were to come back above here, I still have my stop up there, but if it were to come back above here and start trading up here, I might look to exit. Okay, so stay with me here. The reason I'm going to see how this plays out, and I'm not watching this every second, right? We all have things to do. You can't be focused on the charts every moment, right? That's why the shortest time frame I'll typically go is an hour. I think I can look every hour for a couple seconds, right? I can just look at my phone just a moment. It's like checking a text. You pull the app on your phone has a chart that you can see. What's it doing right now? It doesn't look as fancy as this, but it's good enough. And you can see, is it moving around up here? Yeah. Okay, so a few hours have gone by. I don't like it anymore. I'm going to get out. Okay, so stay with me. So my initial target or stop loss was up here, but I was probably never going to let it get that high. So now my target is down here, okay, which is 0.6150, okay? So 6150, yeah, 6150, initial entry is 6295. So what is that, about 150 pips, right? So I'm looking to make 150 pips and risk 100 pips. So that risk to reward ratio right there, not so great. But as I keep saying, I wasn't probably ever going to let it get there. Most likely, I don't know what was going to happen. Obviously, it could have shot back up and taken me out, and that's okay. Because that's what stop losses are for, just in case you have one of these freak movements, right? So I've got my stop there. I was going to see how it behaved. Maybe price jumps around here, and then eventually I'm like, you know what? I'm seeing this kind of consolidation up here. So I'm seeing this stuff right here up here. So I'm in a loss. I'm seeing it kind of move around, not doing what I want it to do. It looks like it's not going to, it doesn't look like it's going in my favor anymore. So I'm going to cut my losses. Maybe I cut it at 63.50 or 63.45. That's a 50 pip loss, right? So now this whole, my risk to reward has changed, right? Originally it was 1.5 to 1. Now it's 3 to 1. Okay, so now I'm risking 50 pips to make 150. That sounds like a pretty darn good trade to me. Okay, now if I break down the contracts, this thing on one contract, remember that one contract equals $1. Now that's not exactly how much it's worth. I think it's worth, on this pair, I think it's worth 75 cents, but we're not going to get into that, okay? Each pair is worth a different amount, but on average, it's worth about $1, okay? So one contract equals $1. So I'm risking $50 to make 150. So if my account size is $100,000, we're just going to use that as an example. My account size is 100,000. On this particular trade, I felt comfortable risking about 0.5%. Okay, I wasn't, again, my bias is not short on this one, it's long. So I felt comfortable risking half, or I'm just going to put 0.5% on this trade. So 0.5, 1% of 100,000 is $1,000, right? So on this trade, I could have risked $500, right? Okay, so if I'm going to put my stop 50 pips above, or if I'm going to get out with, if my stop loss is about 50 pips, that means I can risk up to, right? That means I can risk up to 10 contracts, okay? All right, so stay with me here. This is the fun part. Now we're starting to see, oh, wow, we can make some serious money on this. I'm in 10 contracts on this particular one, right? Now, if I lose $500, but I'm okay with that. That's 0.5%. right? Now, if that's 100,000, if you're different, if you're smaller size, you risk less, you get the idea. So that 150 is now equal to $1,500, right? So this trade just became not a little trade, but a big trade. And you don't have to risk 0.5%. You could risk even less. Maybe you only want to risk $250 on this. You only risk, $100. It doesn't matter. The point is that once you've set aside how much you're willing to risk and you know where your target is, you can see how much the profit potential is on this one trade. So this trade was beaut because once it got to a certain area, and I put this all in the chat, so that's why we need to be very diligent about following the chat. Once this, let's go ahead, just blow this all up. Come on. There we go. Once this trade got into about 30 pips of profit, I was interested in protecting that profit because there's an election going on still. Totally thought it'd be over by now. And we're going to talk a little bit about what's going on in the market, but it's still going strong. So I know that there's going to be lots of volatility. And as you can see already, this is where I was looking at it. It is right back to its original entry point. Boom, snap of a finger. So I sold it up here. Where did my thing go? Okay, start over. Oh, there it is. I sold it up there. As price was coming down, I was not prepared for this to come back up to my original entry point. So losing all this profit, then coming up here to now being in a loss. Absolutely not. No way. So I'm going to protect it. Now, the problem with protecting your positions is you could lose out on a potential run. This thing could come here and then eventually go. That's okay with me because I'll find another opportunity to get into this, okay? So I saw the entry opportunity. It looked great. I put a limit order in. I sold it. Once this thing got into about 30 pips of profit, I protected it by moving my stop that was around here down to here to where my original entry point was, right? So now I'm at no risk. This can do whatever it wants. Don't care anymore. Okay? If it makes money, great. If it doesn't, it doesn't matter. I have no risk on this trade anymore. As it continued to go lower, right? So at 62.50, now I'm in 45 pips of profit. Feeling pretty good about this trade, but I decided I'm not going to do anything until I see a solid movement below 62.50. And boom, there I have it. Starts trading down below to 62.35. Now this trade is up 70 pips. 70? Yes, 70 pips. Yes, 70 pips. Okay. So I'm feeling really good about this trade. I don't want to lose all that profit. So I moved my stop all the way down to 62. Where did I move it? What was the exit point? So 62.65. So I moved my stop all the way down to 62.65. I'm out with 30 pips of profit as it comes right here. It took me out right there. Okay. Obviously, I wanted this thing to keep coming down, but we're in very, very odd times right now, very volatile times. This is no shocker to me that this thing came right back to where it was early this morning. No shocker. So I hope you stayed with me on that. That was the trade of the day. The opportunity was 150 to risk 150, the opportunity was to make 150 and to risk 50. Great opportunity. We ended up walking away with 30 pips. Very happy about that. Remember, 30 pips on one contract, $30. I'll take that any day. Obviously, do more contracts if you can. So, does anyone have any questions about that before I move on to what's going on in the market?
I have a question, Kevin.
Shoot, fire away.
So why did you, or how did you determine your stop loss at 6265?
and is this David?
Yeah, this is David.
Hey, David. Okay, that's a great question, David. And I'm gonna go ahead and mute you again. If you do have any questions, go ahead and throw them in the chat. Okay. Um, so why did I put my entry at 62.95? Was that the correct question? Was that the question? Did I get that correctly?
No, I understand why why you filled the sell at that, but I was wondering how you determined the stop loss.
Stop loss. Okay. So going back to this area again, this right here was an area of resistance. Price obviously had a hard time breaking above this. So now I've deemed this area as a potential point where if price comes back to this and breaks it, I'm no longer validated. So remember, I'm looking at this trade in real time. So I'm looking at this here. So this is a nice bearish trend. Look at this. We got a low, we got a higher, we got a high, we got a lower low, we got a lower high. You see, we got a nice bearish trend there. Okay. If I'm going to sell it here, if it comes back up to here, price comes up to here, I want my stop to be just above that, because if price breaks above this, it's no longer in a downtrend. We are unvalidated. This trade's no good. So I want my stop to be somewhere above the area that signals me that the trend is over. So I'm looking at this, I'm saying, hey, we got a little downtrend here. If it can break this line right here, this support area, I want to get in on that. I want to make some bucks. But if it comes back and breaks above this, I'm unvalidated. I was wrong. Let's get out. Okay. So that's why we put it above there. And the reason I kept saying we're going to follow this area right here, because I have my stop way up here, over 100, about 100 pips away, right? If price is starting to consolidate, doing this jargon right here above my entry point, I may have been unvalidated already. So rather than take my full stop and take the full loss on it, I might get out early and take a smaller stop. At any time, I will always take the advantage of taking a smaller stop than the original stop area. Okay, these are just areas that we put when we're creating the trade, so we can create what our risk to reward ratio is going to be, right? If I think that my risk to reward ratio can be better, meaning here, then I'm going to play off of that. Otherwise, this is where I'm going to put my initial stop, and then I might move it. Okay, so that's the Euro Aussie. That was just the trade of the day. Okay, there are way more trades out there that are going to be opportunities to jump in front of you guys. So if you missed that one, no big deal. Okay, there's going to be a lot more opportunities. I'm very confident about that, so not worried. I want to talk about the Australian dollar really quick. So give me a second here. So the Australian dollar, we were watching this, right? We were watching the the Aussie dollar against the US dollar. We were watching this very closely because I wanted to see this break down lower. We had missed pivots down here. I don't have them up right now, but we had missed pivots here. There was a lot indicating that this was going to break out and we were going to take advantage of that. Well, like I had mentioned to you before, this is extremely highly tied to the S&P 500. Let's go bring that up for a second. That looks pretty familiar, doesn't it? Going back to the Australian dollar, we look at that rally on the S&P 500. There's that almost identical, right? Every day that the S&P was rallying, we had the exact same makeup here, right? So I can't predict when the market's going to do things like that. Obviously, I have to create a bias. I have to look for opportunities based off my indicators. Okay. So let's go ahead and bring up that indicator that we originally used to look at this trade. There it is. Okay. So I was originally looking at our pivot points, and this was in Monday's session, I believe. I think it was. And I talked about how we're going to use these to get into this trade. And I said, we have a lot riding on this pair, a lot of pressure for it to come down, a lot of pressure for it to come back down and hit these pivot points. So that's why my bias was bearish. So I had made a calculated decision to wait for this to be bearish. This breaking up higher, it's not a big deal. I'm still bearish on this pair. So now that it's above here, I've got to wait. So this unvalidated our support here, and that's why we wait for confirmation, guys. Because these little wicks, and these are what we call candlestick wicks, were breakouts if you were to look at it at a shorter time frame. Okay. So we wanted to see this make a solid close below it, and it never did. I was watching this on the intraday time frame all throughout this. Every top of the hour or beginning of the hour, I would pull up the chart, take a couple seconds, look at this. No, doesn't look good. And look, it's consolidating. It's not wanting to make the close. So if we go back to that daily candlestick, you can see it right there. See, it never did. And then boom, the market just takes off and it rejects the support line. So now our trade is currently off the table, but we're still looking for this to come back down and break this. So now what we'll be doing is we'll be waiting for this to come back down. There may be some opportunities in that time. We'll wait and see. You might see a price action pattern that will allow us to trade it down and excuse me, and then get in when it breaks the support. So we'll see what happens. But this was on our list. This became this trade is no longer validated. We're no longer looking at this as a sell opportunity because it's now above our support area to sell it. Okay, so David, let me know if I answered that question that you were asking about earlier. Let's talk about the market really quick. So you know, it's just been a wild ride, guys. I don't know, you know, the political landscape is just completely off the charts. I have CNN going like all day long just because I'm so glued to this voting turnout. It's like nothing we've ever seen, right? And the reason I'm very interested on what's happening is this is not at all what the market was expecting, but maybe it is. You know, there's analysts out there are constantly changing their stance, and we're always going to see that, right? But you know, at first, you know, have you guys seen the recent headlines, you know, lately with the elections and talking about how the basically the landscape of the GOP versus the Democrats. Who's it going to be? Who's going to take the tide? Who's going to turn the tide? Who's going to have the majority? So on and so forth. Some analysts are suggesting that this is going to be a split government, right? And you know, recently we've always had a split government, but what I think they're meaning by this is that this could be good for business, meaning the Democrats and big tech, big tech loves Biden. They love the Democrats. You know, they're all about it. It could loosen the the international landscape for tech companies and create more opportunities, which is good for the big tech, right? And then on the Republican side, the broad market in terms of the Russell 2000 mid caps and some of the large cap, their agenda for that landscape is pretty much the same as what Trump was. So now we could have two sides that could make opportunities go up and both go up, right? So typically you have one side betting against the other. Well, this is a very interesting situation that we're in. So whatever it means, whatever the reason is, it doesn't really matter. We're going to focus on the opportunities in front of us, right? So if you guys look, the NASDAQ is right back at that resistance area. So we were looking at this being bearish. Okay. I mean, we had a lot of bearish indications here, right? And we have two candlesticks here that rally from 1130 all the way to 12100, right? That's a huge jump. So in two candlesticks, these are huge gaps. And the fun thing about gaps, and I posted a chart about this on Facebook, is gaps like to get filled. Whoa, what's FBN? Okay, so I posted a chart on this, and here it is right here. So this is Facebook. Tuesday night, was it Tuesday night? Yeah, Tuesday night, futures are going crazy. They were up 400, then down 400, then up 400. It was all over the place. Very much like the 2016 landscape, right? So market opens, and this is how it opened. A $15 gap in Facebook. The reason I'm bringing this up is this right here. There was a nice little gap that Facebook did. You like my drawing abilities there? It's pretty awesome. And there was our other gap right here. And the reason I'm pointing these gaps out is gaps like to get filled. Oh gosh. Gaps like to get filled. As you can see, we had this nice gap from about 265 all the way to 270. So just a $5 gap, nothing too huge. And boom, filled the gap. Well, you could say it now. Filled the gap right here. Okay. So in order for it to fill the gap, it can't touch it because technically you can see that this candlestick, that wick on this candle right there, touched it. It came back down to this close of that day, but it can't just touch it. It's got to close. So close that gap. Here's another gap, like the next 2 days later. And this one was from 267 to 278. So that's a much bigger gap, right? And boom, close the gap. Now we have the biggest gap in recent price action of 265 all the way to 281, a $16 gap. I was wrong. We have a little gap today too, right? What was that? That was 287 to 292. Interesting because there was a $5 gap right there. It got filled. Now if you add the two together, we're at a $22 gap or $21 gap, right? So the point I'm trying to make here is that price wants to fill gaps. They do. But we have no idea how long it will take to fill the gap. That's the problem with playing a gap strategy. However, there is an option strategy that we can use in terms of short term, right? So if we think that this is going to fill the gap eventually, but we're bullish the stock. So that's why I'm bringing this up. This break above 285, that's pretty darn bullish, guys. And since it seems like the market is, big tech is enjoying the fact that the Democrats look like they're going to take victory here in terms of the president, we could finally see Facebook break this high. and that would be big because this is the all-time high. And whenever you have an all-time high, there's nothing in its way to keep it from rallying to what ends we don't know, right? So fundamentally, I can't really speak to the ability of this of Facebook to make such incredible gains, but technically, I can tell you this: if we get to this area and break it, there's nothing to stop it from going. So if you were to look at this in just the short term, breaking above here is very bullish, right? In fact, it would have been a good idea to pick some up right here, but that would have been pretty short term for me. I want to see what happens here. But in the meantime, I know I have this gap, right? So that brings me to what I wanted to bring up today was a strategy called diagonals. Okay, and I'm gonna briefly talk about long call diagonal spreads. Okay, so a long call diagonal spread. If you think about a call, and let's bring this over here. Okay, if you think about a call, okay, this is Costco. Oh man, I've got there's a great trade that I made with Costco. We don't have time to do it today because I wanted to bring up this long call diagonal spread in conjunction with Facebook, but we're going to definitely bring that up next time. So Facebook, a long call diagonal spread is just like I was talking about. If you're bullish the stock, you feel like, you know what? The landscape is looking good for tech. We want to buy some Facebook, right? Well, right now, one contract of one option contract is equal to 100 shares, right? So this guy is going to cost me $29,400 to buy 100 shares. That's pretty expensive. So rather than having all of my option or all of my margin being tied up in one position, I might buy a call. But like I had mentioned to you guys, I don't like just buying calls and buying puts. It means that you have to be more right than not. It means that these kind of moves like this, these have to happen, right? If you don't get these kind of moves, and you buy a call with 30 days out, and it just kind of putters around like this, and you're looking for it to go up here, you're dead in the water. You're going to get eaten up by time decay, all kinds of things, right? So this is why options are very tricky when you're just buying calls and buying puts. Now, just as a refresher, if you're new to options, calls means you're looking for the stock to go up, and puts means you're looking for the stock to go down. So if I'm buying a call, I'm bullish the stock. If I'm buying a put, I'm bearish the stock. A long call diagonal spread is where I don't know what's going to happen in the near term. There's no way I could possibly predict that, right? But I think long term, especially with the I know I keep saying this over and over, especially with the political landscape, this guy could go up to 300, 350, 400. Who knows, right? So I'm long-term bullish the stock. So if I'm long-term bullish the stock, I'm going to come out for a longer term call. Okay. So here we are. Here's the here's our options, our strikes and times here. Okay. So I've got November 27th, December 4th, December 11th, et cetera, et cetera. Well, that's not enough time for me, right? Especially the end of this year. We're getting close to the end of 2020. That's definitely not enough time to envision my bullish projection, right? I need to go way further out, way further out. I'm thinking January of 2022. I'm thinking I'm going to let the whole year of 2021 do its thing, because think about that for a second. Let's put COVID to the side for a second, because that's just a crazy anomaly, right? Here's 2019. Look at what price did in 1 year. Had a nice healthy rebound after that short-term Chinese recession, that sell-off, and then it goes up and up and up and up, and then down, and then up and up and up. But to get from 127 all the way to 220, $100, which is huge, right? It took a year. And when buying a call, we need to move big. So I want to give it as much time as I can. So I'm going to go look out at the January 2022 contracts. The problem with January, the further out you go, the more expensive it gets, right? So if you were to look at, so this is actually interesting. If you are expecting, so if you're thinking that you can, if you want to pick up Facebook a year from now at $200, they're gonna make you pay for it, right? So 108, one contract, that's gonna cost you how much? $10,000 for one contract. Obviously way too expensive, right? But if price is currently at 295, and I think it's gonna shoot all the way to 350, 375, I don't know, right? I don't want to buy it where price is at now. I want to give myself a little wiggle room, but the more wiggle room I give myself, obviously the more expensive it gets, right? So knowing that it's going to be expensive, I do want to give myself a little wiggle room. So I'm going to buy this 6230, okay? I'm going to buy this call contract right here. But that means I'm sitting in this thing for a year. So the way we get to our long call diagonal spread is, like a spread suggests, is we're going to now sell. We're going to sell a call. So we're going to have two different trades going at the same time. Okay? So what I did is I changed this to diagonal. Now this is just for education, you guys. When I actually see the opportunity for us to do, we'll break that down a little bit closer. But I'm just trying to explain to you how these things work and how you can take your bullish bias and use it in your favor to maybe buy Facebook at a good price now for way less money, right? So, so I'm going to stay with singles just to make this easier to understand. Excuse me. So I'm going to buy this. It's going to cost me 47. Actually, I'm going to buy this one, right? It's going to cost me $6,230, right? So I'm already in the hole, $6,200. So I need to make some of that money back. So I'm going to sell some calls, right? So if I sell a call just right here, this is not how you would actually set it up. I'm just trying to illustrate. Where's my pen? There we go. So if I buy this call right here, I'm down 6,200, right? Long-term, very long-term strategy. I'm going to sell on the opposite side right here, okay? So my purpose of this is when I sell a call, what do I get? I get the premium. So I'm going to make 50, if I sell this call right here, which I probably wouldn't, but if I sell this call right here, the 55.70, I'm going to make $5,500, right? So now my loss, my debit of this $6,200 call, I just shrank that down to, instead of $6,000 to about $1,000, right? A little less than 1,000. So now owning this stock, where is my chart? There it is. Okay. Owning this stock, buying a call at this, waiting for this to move around, I no longer have the fear of waiting for finding out if I'm wrong or right, because I just made a whole bunch of money on that. Okay. So this is what they call a long call diagonal spread. And you guys fire questions away at me if you've already thought of any. Okay, so this is more on the intermediate level of options trading. It's a little bit more tricky when setting this up. I haven't gone through the ins and outs of how exactly you would do it. This is more for illustration. Okay, but what I want you to start thinking about is, where are opportunities in stocks, maybe tech, something else, that I envision a very uh, growth friendly future. Caterpillar was one of the ones that I was looking at because I see big industry continuing to rise. Once COVID is cleaned up, once we can get out of this landscape that we're in of uncertainty, and everyone can start spreading their feet out, development's going to kick back up. We're going to see more. We're going to see more development, more growth. Companies, major companies like Caterpillar, are going to see huge gains, I think. Okay, so since I have a bias of Caterpillar shooting through the moon, I might think to go out to 2022. It's trading at 163. I think it's going to be trading at 250. A year from now, maybe, I don't know. But I'm fine with buying this and spending all that money up here, right? I'm fine with doing that and spending all that money because I feel like I'm right, and I'm going to sell a call to offset this huge loss. So then instead of being down $3,000, I'm really only down $500, right? And then having to pay $500 to a year from now, owning, maybe I exercise it, right? And then owning the stock at 145, and maybe a year from now it's at 210, 240. That profit right there, then I go out and sell the stock. If I buy it at 150 and it goes to 200, I lose 50. I lose the money that I paid for the stock, but then I gain the money in the option, right? I gain the money in the option, and then I'll also go out and sell the shares. So I've made $50 per share, and I've made money on the call contract. So this is a great strategy for long-term biases, right? So start thinking about that. And let's bring up Snap, Joyce. So anytime I have to make sure that it fits my bias technically. I mentioned it before. I have no idea what the fundamental aspects are of Facebook right now. Technically speaking, in a technical analysis point of view, this is looking very bullish. It's looking very good. Let's take a look at Snap. Snap. That is a huge gap. Wow. Oh, that's right. No, I knew about that. I forgot about that. So earnings came out and they must have killed it. Goodness gracious. Taking a look at Snap, tech on a technical basis, I'm not as bullish this. Now I'm not talking about long term. I'm talking short term. Okay, so if you think about Facebook and what I was just talking and bringing up, I see opportunities that this thing can continue to grow. Right? Snap is a little different. If you believe in the company, just like you believe in, say, Facebook, it's like I believe in that company growing, right? And these are just examples. If you believe that Snap is going to continue to grow, going to continue to dominate market share in that social media space that it has, right? Then this could be a good diagonal strategy to look at. But since we have to sell a call on this, I need to make sure that this does not go above my strike price, right? So if I'm looking at this just made a huge run, and right now it's starting to exhale, but it's also very peculiarly making a flag pattern. Okay, so that being said, this might not be a good stock for a long call diagonal spread. Remember, you can't just be giddy on the stock long term, because the spread aspect is how you make up for that loss in the call, right? So what I mean by that is a flag pattern, and I've talked about this before. Flag patterns are my favorite. This is called a bullish flag pattern. Okay, looks like a flag, and what happens is if this breaks above this resistance area, most likely based off of historical data, we can expect this thing to move from the low of the flag to the high of the flag, okay, which is here to there. So that's 40 to 44. So if this breaks here, I can expect it to move about $4 up, right? So I don't like a long diagonal spread on this one because it's still looking very bullish, right? We need this thing to look bullish long term, but we need to have this thing have possibility of selling off. So remember, when you sell a call, you want this to be bearish, right? You want this to excuse me, you want this to be bearish to neutral, right? So we don't want this to shoot up. If it does, we're gonna be in trouble, right? We want this to do some of this, right? This is what we're looking for. A lot of this crap right here, right? If we can't envision that opportunity right there, then we're just buying calls, right? In order to do the spread, you have to see the opportunity that price will start to flatten out. So what we're going to do on Facebook, as an example, is we're going to see what happens here. And if it starts to come down again, then I'll look at my long call strategy, because I'm still bullish the stock, right? But the stock can't go above our strike price. If it does, we're going to lose. So you don't want that. So Snap has the opportunity to continue its bullish run. So it would be a little too risky for me to want to sell a call on this. Okay. What's the ticker symbol for Pinterest? Oh, it pins. Awesome. Same exact scenario on this. Even more so uncertain. So this strategy, you have to see an opportunity for price to start flattening out. But something to note here: look at these gaps, right? All these gaps on this stock. I'm seeing something very interesting. Gaps don't necessarily have to get filled. They want to get filled. So would you say that price is going to come back all the way to $25 on Pinterest? Joyce? No, I don't think so either. And sorry, David, I'll get to your question in a second. I didn't see that. So price doesn't have to fill gaps. They want to fill gaps, okay? So this does not have to come back down here, right? You have to have a lot of bearish pressure for a stock to come back and fill a gap. Facebook has just been the example because it's been easy, right? There has been a lot of back and forth movement. So these kind of gaps, they like to get filled. And in this kind of scenario, it's more likely to get filled than, say, Pinterest. It to come back down to here, not likely. Very bullish on the stock, looks very good. Technically speaking, we don't have very good opportunities. Your opportunity on this stock would have been back here, but that would have just been a call, right? Remember, we need to have this do a lot of flatlining. So let's say you sold a call here. You sold, I don't know, that's the October 2nd. Let's go to, okay, let's say that you sold the November 6th. You gave it 30 days, right? You typically don't want to give, you typically don't want to give short options that much time. The more volatility, the better. You can, but in this particular strategy, the less time, the better, right? So about a month is okay. Well, what was the problem with this one? Let's say we sell a call, the November 6 calls. We need price to do this or stay below. Boom, you're in trouble, right? Now your short call position is going against and eating away at your profit on your long diagonal, right? No good. So this particular chart is no good for a long diagonal. Okay, we are looking, you guys, when you're looking for stocks that you believe in, you have to also think about what it's doing, right? If you're like, I believe in this stock, I think it's going to go places, there's different strategies that we can use for that. In this strategy, you need it to go up there one day. So that's why I'm looking a whole year out. So I want to make some of my money back. So I need this to do a lot of this stuff, right? So Snap is no good. See, we have a potential opportunity for a breakout here, but that does leave us an opportunity for a different strategy, which we can talk about. I doubt it's going to do anything between tomorrow and Monday. So Joyce, remind me, and we'll talk about maybe potential opportunity with Snap. Pinterest. This is just screaming up. Looks really good. If you're long the stock, great. If you're not, we needed to take a breath. Okay, we needed to breathe. We need some technicals to show us an opportunity to get in, like right here, right? This would have been a good one. This is bullish for me, but not that great, right? It was really sideways for a while and really sideways for a while, right? Now it's just running up and it is taking off into the stratosphere. Who knows when it's going to stop? So this one's a little too tough to determine for that strategy. Do you have any thoughts on NOI? NIO, sorry. Oh gosh, yeah, that's been, oh man. This stock has been going crazy. NEO. Oh yeah, everybody's been talking about it. Yeah, it's pretty much like Pinterest. This would have just been a good one to buy a call on. Again, I don't really buy calls, right? You could have done a bull call spread. We're going to talk about that strategy with Costco. So I'll put that on my calendar to talk about Costco and Snap. Okay, but this would have been your opportunity right here, guys. Here and here. Okay, you could have just bought a call, something. It's gone. It's pretty much it's toast for right now. If you're not in, you're too late, which is fine because when things run up like this, they've got to breathe. So maybe if this is a stock that you actually like, I don't really know a whole lot about it other than it's just been extremely hot in the trading community just because of this rally. Other than that, I don't really know a whole lot about the company, which is fine with me. I trade lots of stocks, especially options, on companies I know nothing about. With certain strategies, I do that all the time. Okay. So we need this to take a breath and maybe make some of this action. Okay. We need a flag. If this is as bullish as it's presenting itself to be, let's wait for this right here. Okay. So NEO had a great run. Let's wait for it to breathe. Let's watch the price action. Put that on your radar, David. Okay. And let's bring that up down the road because I can see this presenting another bull flag opportunity. There's definitely some money to be made on this one. There's a lot of money to be made on the tech sector, you guys. This is good news. So I've gone over time here. So just to wrap this up, long call diagonal spreads. They're good for, I'm going to write this out for you. When you're looking at a long call diagonal spread, excuse me, what you're looking for is you're looking for long-term bullish, short-term volatility. Okay. There's many other things that go into that. This is an example day. When we actually look for trade opportunities on this one, we'll go a little deeper. okay? So long-term bullishness, short-term volatility. That's what we need to trade this particular strategy. We're going to wait on some of these other stocks. We need them to relax. We need them to exhale. I bought NEO at 17. I love it. Great work, Choice. What a champ. So what are you going to do? I don't like Chinese stocks though. I trade stocks all the time based off of technicals that I don't like. But that's okay with me because I don't plan on holding it. I plan on making some money and then getting out, right? So maybe being in it like a month or 3 months max, right? If you're still in it, you bought it down here. Sounds like you bought it right around here. So you've been holding on to it for a fairly short amount of period of time. It's going very well. Joyce, this would be a great opportunity to, how many shares do you have of it? Secret. Okay, well, this may be an opportunity to sell some calls on it. Okay, we can talk about that next time. But that's what I would be looking for. You're in a nice amount of profit. If you don't like the stock, now's a good time to take some profit on the table. But if you think this stock is going to keep going, there's a lot of opportunities to make some premiums on it. Okay, so we need this to take a breath though. So I would not do a single thing with NEO. So that's my official opinion. Would not do a thing. This needs to breathe. Okay, so Forex, stocks, lots of opportunities, you guys. If you're not paying attention to the group chat, you're gonna miss lots of opportunities to make a few $100s here and there often. So have that group chat open, be asking questions. Keep those alerts next to your head. But again, if we talk about it in class on Monday, oops, what was it again? That's right. If we talked about it on Monday and I said I might potentially sell this, then you should definitely be ready. You don't have to wake up at 6 a.m. every day, but you need to be ready. This was an easy one, and there's going to be lots of them. And you guys, this is just easy money, super easy money, okay? I love taking nice and easy trades like this. In fact, this trade will probably present itself again. Hard to say with things going right now, but there's lots of different things going on right now in the overall currency market that I'm digging. This right here, I'm digging a lot, okay? I think there's going to be a sell opportunity here soon. We'll see. I'm not going to do anything before the weekend comes. So that's all I've got for you guys today. If you have any questions, let me know. Does anyone have any other questions? Any other stocks that I can bring up real quick? And if not, I'm going to go ahead and sign off here. We'll see you guys on Monday. Keep that chat open and running. You never know when a trade's coming. Most likely nothing this weekend. But again, if you you guys need to be in the chat asking questions. Let's bring up IPOB really quick. If you have other stocks you're looking at, you should be throwing them in the chat. Okay. I'm sure me saying the chat over and over is probably getting old, but that's what the chat's for. Social cap. How to Sophia? Anyways, how'd you find this one? So I actually really like this. Oh yeah, okay. I actually really like this a lot. I'm going to go through this very quickly. This is a head and shoulders pattern, just a nice one. Okay, I've drawn a head and shoulders pattern. This is a technical pattern that tells us that the stock has a lot of opportunities for resistance and support areas, okay? As I mentioned, head and shoulder patterns are typically bearish. A regular head and shoulders pattern is typically bearish. So if I were to look at this just technically speaking, I would see if it's going to hold on this level. And if it does, I would anticipate this to come back down. This could be a good opportunity for a credit spread, which we have not talked a lot about, and we're going to. But Joyce, if this can hold, break out through this level right here, I don't see any reason why this isn't going to come back up to here. How long it'll take, don't know. If it can break this level, stay above it, anticipate this to come at least back to this top of this head within depending if this plays out this pattern, we have to see first. Then I would expect this stock to come back up to at least 26 within a month based off of this pattern. We'll see though. So yeah, I actually really like this stock. Just technically speaking, it's got a lot of opportunity in it. Okay, guys. Good session today. I will talk with you guys on Monday. Have a wonderful weekend. Send over questions tomorrow. Tomorrow should be a wild day. And we'll talk to you guys soon. Happy trading.